Wonderful to have you here with us on Freedom Day for a nice Q&A session with our Cashbox partners. With us today, we have Andrew Mobsby and Chad Pope and Scott Picken, our CEO here at Wealth Migrate. There's been a lot of excitement and energy around structured notes, specifically within our community. So we wanted to present you all with this opportunity to ask questions about structured notes direct to the source with Scott, Chad, and Andrew here. With that, I'll kick it off to Scott to begin the conversation.
Awesome. No, well, thanks very much. And I do want to acknowledge everyone. It is a public holiday. And so thank you, Andrew and Chad, for being here. You know, Gabby and I were talking about this, and it is a public holiday, and a lot of people are with their family and their friends today. But with it being such a significant day around Freedom Day, and, 27 years ago, Nelson Mandela was elected as, the first free and fair president of South Africa. And although there's many people, it's interesting. I don't know if the two of you know this, but we've now got members in 158 countries. So it's far from just a South African solution. But what I do think is symbolic is that Nelson Mandela represents a lot of what freedom is actually about. And I think today, one of the conversations that we want to have is that was around political freedom. But we really want to talk today about economic freedom, financial freedom. But I actually almost want to lose those words even and just talk about the word freedom, full stop. Because I think something that I'm desperately passionate about is for people to actually be able to get access to freedom. Now, what does freedom mean? There's some great comments and quotes which we're going to go through today. And what we really want to talk about tonight and with this is a fireside chat. So I want to share my screen here. And the idea that Gabby and Chad and Andrew and I have spoken about is that if you look at it, this asset class in terms of structured notes is something that I had never heard of until about 2 years ago. And for me personally, I'd like to believe that I've got all the right education. I've been to the right universities, both locally and overseas in London. And yet when Chad originally came to me and said, well, they're structured notes, I was like, what is a structured note? And then many of you have heard me tell this story before, but I remember going out to our community and I expected to get vilified. We call it our top 100 investors. We call them a Dream 100. And I expected to get vilified with some crazy new financial structure no one had ever heard of. And what blew me away was that at least 2/3 of them came back and said, oh no, we know structured notes. We've been investing in them for years. And I was like, it really kind of, and I think it's going to be the essence of this entire conversation, was like, there's like this whole party going on that most of us aren't invited to. And finally, when someone invites you to the party, you at first you've never heard of it. And then secondly, you feel a bit aggrieved that you weren't invited to the party. And so what I think on Freedom Day and the essence of today with our fireside chat is that we're inviting everyone to the party. And that for me is really quite exciting. And so the two people that Gabby introduced you to, the first one is Chad Pope, and he's a successful businessman, both in property and a global investor, and really was, along with Andrew, one of the founders of Cashbox, and will explain some of the journey. And many of you have heard the story before, and so we're not going to go into the detail of it. But what we are going to do is, with the essence of freedom in mind, to understand how Chad uses vehicles, because this is the really important thing. Most people in life, I believe, and again, with the essence of freedom in mind, most people in life think that, well, should I put my money on Bitcoin, or should I put it in a structured note, or should I put it in the next medical building, or buy a house? And what I think most people don't get right is that there's no one asset that's ever going to make you very wealthy. It's the habits that you create. And then the asset classes are purely the vehicles to make that happen. So the first person is Chad, and the second one is Andrew. Andrew, I still enjoy this picture because for me, most people think when they're talking to someone that's all about money, ex-investment banker, international banker, family office, etc., they don't imagine someone that's done all these ultra marathons and Ironman and everything in between. But it certainly shows the resilience that you guys have been through. So I really wanted to welcome both of you to this fireside chat. I really appreciate it. Where I'd like to start off is Chad or Andrew or both of you. I'd love you just to give the premise around how you started. What is a structured note, not from a diagram perspective, but what is it to you? What does it mean to you, and why did you start Cashbox?
You want me to take it, Andrew?
Sure.
So Scott, my family and I joined Wealth Migrate as partners about 10 years ago. And at one of the functions at Henny's Farm, you said to us, if we ever find anything else or we can bring something to the community, please, let's do that. And about 5 years ago, I didn't know there was a party called a structured note either. And I bumped into Andrew through a mutual contact, and we got invested in this particular asset class. And lo and behold, we were fetching the returns he had promised, being Andrew. And to the point, I said to him, come on, this is not fair. I've been investing in different classes, different asset classes, receiving maybe a third or half of these kind of returns. Like, how's this possible? We ran it for a period of time. It was possible. And then, of course, friends and family come along and they go, well, where would we go? How do we get involved? And I got chatting to Andrew and I said, how do we make this fair? How do we democratize this? Because these products are expensive to get into. He showed me a way. And then I said, this smacks of a Wealth Migrate model. We must speak to Scott. We can democratize what was previously out of reach and give it to a lot more people. And I'm talking about looking for a solution for my children, for friends, for family. And then with that working, Scott, like, how do we get this to the Wealth Migrate movement? Because it is a community of like-minded investors. We had to do this. And in order to bring this to fruition, we started a financial services business called Cashbox Global. So that was really the birth of this. And I really got to thank Andrew for sharing and wanting to give as well. We spent a lot of time on this. We try to educate and build. And without Andrew's experience, this wouldn't happen. And Scott, without you starting Wealth Migrate, this wouldn't have happened. So I want to acknowledge everybody here and for Gabby for taking this to the community. So from my side, thank you.
Awesome, Chad. Tell me, Andrew, from your perspective, and just for those that don't know, I tend to think that sometimes people take these things for granted, but most people know what an international banker is, but what is actually a family office? In kind of layman's terms, what is a family office? Because most people don't understand what a family office is and certainly don't use one themselves.
Yeah, thanks, Scott. Hello, everybody. Family office means different things to many different peoples. It's a matter of interpretation, Scott. But essentially, if you think about your tiers of banking, your tiers of financial services, you pretty much start with your high street bank. You move on to retail banking, business banking. You get into private banking. And generally, it's how the bank perceives you in terms of your share of wallet and what services they want to actually put out to you in terms of reduced fees, added opportunities, et cetera, et cetera. And then as you get into sort of probably a tier above the private bank is something which is really, it's really been in the realm of the ultra high net worth and wealthy families. It's pretty much a European concept. So a family office is literally something that takes care of your entire family, pretty much from your children, the breadwinners, aged parents, siblings, whoever that family wants to, friends and family wants to include in their circle of influence. And generally it covers, it can cover, it doesn't always, but it can cover pretty much everything from investment to fiduciary issues, to banking, to property, to maintaining a watchful brief of governance over your auditors, legal people, accountants. It's pretty much a super sort of protector on steroids without the sort of heavy-handedness. So it's basically bringing and making sure that all the necessary skills that a high net worth family would surround themselves with. It's very difficult to find one individual that can do pretty much all of those aforesaid things. You need to draw on areas of expertise. And it's becoming very popular because, as Chad mentioned, the democratization of this particular product from having, eye-watering entry levels at a point, we've now brought it down to really accessible. And the same for family offices. I perceive that into the future, your relationship with banks is going to change, and people are going to want a more hands-on relationship with the steward or who's managing and curating their wealth.
You know, it's interesting because there's two things that come to mind. The first is that the fastest and easiest way to do anything is to copy someone that's already doing it. You know, so if you want to get successful, copy a successful person. If you want to get wealthy, copy a wealthy person. And when I look at it, you know, you are, from a family office perspective, that's what you're doing. And you've learned, and there's principles that these wealthy families are effectively implementing. And the rest of us are not implementing it. And then we wonder why we're not getting the same results. You know, so for me, that's a really, really important concept.
Correct.
The second thing that's interesting is that most people that, you know, are on this webinar or watching the recording often come from that mindset of, and some of you have heard of it before, but there's more month at the end of the money. And where it's like, it's almost like you're just trying to survive, quite frankly. And yet when you talk about the family office concept, it's about generational wealth. It's about long-term planning, and it's less about the actual, this investment or that investment, and more about the overall plan, not only for yourself, but for your ongoing family from a generational wealth perspective. And I think, you know, that for me is something that I really want to speak to today, because with the whole essence of freedom we're talking about, is that a family office really is the one that's providing that whole family with that freedom, not just for this generation, but for multi-generations. And you know, we're focusing on the structured note tonight, but it's not that the structured note gets you wealthy. It's a vehicle or a catalyst to get you there, basically, you know, in terms of that process. And I think that's really important. So I wanted to share with you just something that I think is critically important in terms of just people being able to put in their diaries. And Chad has agreed to do a webinar with me on the 5th of May, which will be our Wealthy Wednesday. So this is just a shout out to people. And most of us have read the Rich Dad, Poor Dad book. In fact, I'd be very surprised if anyone that's on this call has not read that book. And we find ourselves in this, often in this employee section or the self-employed section, as Robert Kiyosaki calls it, the E and the S. And pretty much everyone's trying to get to become an investor, you know, which is where they have money, which is working for them, and they have unlimited income potential. And really, it's all about freedom in this bottom right corner. And what's interesting is that some people are business owners and they're wanting to become global citizens and have diversification across the world. But at the end of the day, all three of these quadrants are really trying to focus on this quadrant. And our purpose on this webinar on the 5th of May is really to talk about it and to show you some of the simple steps that you can take, whether you're here, or here, to come across into the investor space. So tonight is not the how-to. I want to be clear. We're going to talk about that on the 5th of May. What tonight is about is understanding the structured notes, and again, from a fireside chat perspective. But what I really want to focus on tonight is even the why, because it's really interesting. And you know, Chad, you sent this this picture to me, and thank you. This is from Cashbox. And I don't know, Chad, if you want to talk to this a little bit around, you know, it's from Robert Kiyosaki, so it ties up pretty nicely. But, you know, most people are always trying to focus on the how and the what, but they don't get clear on the why. And without getting clear on the why, they actually never achieve the how and the what. What's your thoughts on this, basically?
Sorry, I was muted. The hardy dogs are enjoying themselves outside here. So if they make a noise, I apologize. So, Scott, you're right. Robert Kiyosaki, I think, was a big influence. I devoured all his books, and I think what stood out is understanding that I would love to get to a position where I could be free to spend my time as I wish, as I like. How to look after my family, and how do I look after, hopefully, my family's family in the future, became my why. My drive was to be able to try and give back. It took me a long time to get there, but what's amazing is with that why, created a deep need to understand stuff, which really got me introduced to yourself and to other investments. So without the why, there's really no reason to start, because sometimes the how can be difficult. But if your why, your Northern Star, isn't clear, you know, you can easily get distracted or not even start. So yeah, understanding why is terribly important in anything we do, I guess. And financial freedom is one area of my life that's important. And I drive that as hard as I do other stuff. So yeah, why first? and why every area of our life, I guess.
This is the last question before we get into the vehicle, and it's a slide that you sent through, and I don't mind Gabby, Andrew, or Chad if you want to talk to this, but real wealth is about freedom, and I just thought, again, perfect as we sequestrate from the why to the how. But I love this, because it is so true. It's actually, people think it's about money. It's not. It's actually about freedom. And I don't know if any of you want to talk to this.
I'll do it, and then I'd love Andrew's input too, because I think with the number of families that he deals with, he's probably seen various forms of this. But what struck me when I saw this picture, my daughter is a very creative person. I'm more analytical. So I think real wealth is to be able to give my children the ability to do what is their passion and their purpose in life. To understand that for all of us, I think is the real gift. And to get on and go and do that is terribly important. So again, wealth, like health, is important. Look after them in order to go and do the stuff that you were meant to go and do. So personality profiles for me are terribly important. Who are you and what are you meant to do? I think it's a big question for all of us. So I think wealth is health, it's freedom, etc. So yeah, the photo caught my attention straight away. I loved it.
Awesome. Anything from your side, Andrew?
Chad's got party doors. I've got a beagle puppy that's rather enthusiastic as well. So if he makes a noise, I apologize in advance. Yeah, it's a great picture. And I think Chad mentioned something. We start off by what is a family office. There's the word family. He mentioned his daughter. So straight away, one's moral compass points to not just adding a zero on the balance sheet. It's not about that. It's about what you, Scott, mentioned as intergenerational wealth. More and more people are concerned about how they live and how they protect their wealth. It's a common mantra. You build a moat around your castle. Secure yourself. But freedom should not come at a price. Freedom should be advised, and wealth should be advised on. And when you ultimately unshackle from the captivity of a balance sheet, you will see the enormous emotional release, not just financial release. As Chad said, it may be health, it may be the emotional link to creating wealth and the businesses you run. But it's such a multifaceted diamond. And the thing with the diamond is that you've got to constantly keep it polished to keep it shining. But really, if you talk about family, you talk about, as Chad mentioned, the difference in characters, the different personality profiles. That's what you've got to look to. That's what you've got to maximize. I particularly love, I do have an old Land Rover. It doesn't break down a lot and it doesn't leak a lot of oil. So people say there's something wrong with it. But I love their mantra, you got one life, live it properly. We'll just live it. And part of that living is being free. And that's real wealth, to be able to do what you want to do and live it accordingly to your particular dictates.
So this is a fantastic segue now, because for me, with wealth being about freedom, one of the things that I've learned from wealthy people is that it's about having diversifying across multiple different asset classes. And a lot of people think, particularly middle class people, think that it's all about capital growth. Can I buy Bitcoin and it's going to double, or can I buy a house and hopefully it's going to go up? But actually it's about predictable income, because freedom comes through income. If you've got predictable income, then ultimately you can live the life that you want. Because as I tend to joke with people, if you've got lots of Bitcoin, unless you sell it, it doesn't help you buy much. So I'd love you just to talk through explaining with the slide, what is a structured note and why does it provide people with that predictable income? And to the same extent, so there's the first question and a second part to the question. And the second part is, with that predictability of income, it's such a popular asset class around family offices. Why? So again, why is that predictability there?
You want to go, Andrew?
So you want me to talk about the slide first? Okay. I sort of mentioned it in my opening address, what is a family office? And, if you start from the top down approach, most countries, well, pretty much all countries have a central bank. They govern the currency, they govern the economic, to a large degree, the economic policies of that country. And they basically instruct the banks below them in the banking system in terms of how they would regulate their behaviors. So let's flip it on its head. That's the central bank at the top. Let's flip it on its head. Start at a high street bank. We're all used to that. We've all seen how that's radically changed in terms of the digital age, where you don't know your bank manager. There isn't a bank manager. Pretty much high street banks are slowly disappearing, much like checkbooks and things like that. They are legacy instruments. But above that, in terms of the hierarchy, let's call it like a Maslow's hierarchical triangle, you'd get your business banking. So your higher end, bigger contracts, bigger deals, perhaps in the business, commercial, industrial, manufacturing spaces, you name it. It's where deals are done and where the economy really ticks over. And then above that, you have your investment banks. Now, the investment banks are interesting creatures because within the investment bank, that's essentially where the really large trading operations happen. It's your merchant banking, your stockbroking, your corporate finance deals. It's pretty much closed, in many respects, closed door stuff, but it's really where the institutional type of returns are made and which generally don't flow down to the guys who are walking in the high street. So high net worth families, ultra high net worth families who are looking for predictable income, who are looking for this freedom, this holy grail, so that they can go and do what they would like to do, pretty much operate in that investment bank space. So in other words, they wouldn't be at the retail level and they wouldn't be at the business banking level. Some of their businesses and their operational issues would be happening there. But in terms of the type of payoffs that they're looking for, and what I mean by payoff is the type of benefits that they derive from their structuring, from the solutions that those investment banks offer, are light years away from Joe and Jane public, if we can call it that. It's simply at eye-watering levels of subscription. To give you a brief example and to segue, as you said, into perhaps the structured note space, paying back over the years, and there has been a democratization and it's ongoing. But generally speaking, when I started in the structured note space in Switzerland, the UK, to create a so-called bespoke high net worth value proposition for a family, Switzerland, you were looking at probably between $1 and $3 million per deal. Not what you were worth, that's what they wanted before they'd get out of bed and talk to you. But when they did get out of bed and talk to you, they came with absolute fantastic returns that just are not seen in the retail space. So maybe Chad can take over from that and explain a little bit more fully. But essentially, it's the old mantra: very big money gets the attention. And that is what we've done. We've literally aggregated a lot of clients into a space where we, instead of one client having $1 million or $2 million or $500,000, we may have a grouping of like-minded clients. So we come with the actual tranche in place. The investment bank is not really interested in the makeup of those individual clients. They want to make sure, have they got the money to hedge the deal, and off they go, and it's off to the races. So Chad, I don't know if you want to take it from there in.
Just before you go to the income, I wanted to add a caveat there that Andrew said that I think is so important, is that 20 years ago, Andrew would go along to a client and he would be in Switzerland at the client, but because it's all paperwork, it's people-based. So Andrew doesn't want to deal with 20 or 50 or 100 clients because it's impossible. Like, he doesn't want to have to be writing them emails and paying their returns into their bank accounts. It's administratively a nightmare. So investment banks, and to be fair, the family offices only wanted to deal with 1 or 2 people at a time. Like, that's just how it was.
Correct.
With the democratization of technology, that has dramatically changed, where you can group people together now and they can have the buying power of that same institution. And if you look here just on the right here, and I know, Chad, you're about to go to it, so we'll move to that now, but us retail investors are used to kind of 3-4%, and we get excited. When Chad and Andrew first came to me and they said, no, but people are getting kind of, I remember 8, 12, 16%. I was like, what? No one's getting those type of returns. They're like, no, they are. It's just at the level that most people don't get access to. And I think for me, if you take, this is the overall of how it works. Now you go to this, Chad, which is, from your perspective, as I understand it, is the income side of it. And I don't know if this is the right slide, or if you want to you stay on the previous slide. But the point being is that what excites me with this is two things. One is the income potential, the predictable income potential, and then the second one is how do you manage risk?
Perfect. So can you believe it? We can go to an investment bank, we take in $500 or $1 million, euro, pound, and as you said, through digital platforms, we're able to then get 10, 100, 1,000 investors together to make this happen now. It's not just one individual investor. And look at what the investment bank's going to do. So if you have a look at the start value, which is at 100%, they're going to look and couple this to 3 or 4 different stocks. You can buy insurance, Scott, can you believe it? That says that even if those stocks reduce by half their value, I'm still going to pay you a quarterly income. Isn't it ridiculous? And that's what these institutional returns have been doing. So I said to Andrew, dude, it's too good to be true. Let me try. We ran it for a couple of years. Lo and behold, it's exactly what it did. And can you believe, with the structuring partners that we used to create these contracts over the last 5 years, 936 of these products were produced through this one structuring company. Every single one of them has produced as designed. And we also then build in a capital protection barrier here as well. So Andrew spoke about building a moat around your shares and around your castle. So why would you want to invest all of your portfolio? And we do always have risk shares in a portfolio. What this does is it's designed to protect that capital. And we can protect our capital even if those shares drop by half. The bank's underwritten the product. I know that they're good for it because they are the world's largest and we'll only deal with them. We created 8 of these products, Scott, through 2020. We went through the market crash. Not one of our investors had an interrupted coupon flow any quarter last year because of the depth of protection on income.
I'm just going to jump in. A coupon means getting paid interest every quarter. Okay.
Sorry, yes, that's the finance guy sounding fancy. A coupon is an income stream. Sorry, yes. And half of the last 5 years has been trying to figure out what this means. So I've created a bit of a dictionary in the front of my diary on different words. But Scott, so the point is, and if you'd like to understand more and go under the bonnet, that lives in a different space. But this is possible and it's being produced. And we just launched the previous note, and I think you guys filled it up in like 24 hours. That's producing 3.5% each quarter, quarter on quarter, which is phenomenal returns. So yeah, I'm delighted. That coupled with the property, coupled with growth assets, you can really create a really interesting portfolio now. And these pieces that you can live off, this predictability, is lovely.
So let's talk to that, because I think this is really important. So one of the things that I've found interesting and frustrating with structured notes is that for someone like me, I didn't really understand it. I consider myself fairly intelligent, so it took me a while to understand banks and everything that you've kind of explained. And I now get it. At the end of the day, the banks need the money, and so they're prepared to pay a good return to institutional investors, and then they use that money to basically lend to the rest of us retail investors. So it's going up the value chain and being able to participate up the value chain. Then the next question came along is, just as I've got my head around a structured note, it disappears, okay? Because it literally gets formed within, 2 weeks, and generally it gets, taken. And again, the way that it works, and again, I'm using my own simple language to somehow dumb it down, but by the same token, tell me if I'm getting it wrong, is that you still need to have that large amount of capital. So if I rock up to, BBA or Morgan Stanley or something, and I say, I got $20,000, they'll just laugh me out of the room, So you still need to have the consolidated capital being a couple of $1 million. And what often happens is there'll be a big fish. So I like the analogy, Chad, you used, where you've got a whale and then you've got like a little sucker fish that's on the side. Okay. And the big whale is the one taking the deal down, and the little sucker fish is tied to the whale, getting exactly the same returns as the big whale, but the little sucker fish needs the big whale to make it take place. Okay. Just talk to me a little bit about how that works, and then we'll come back to the timing.
All right, excellent. So we need to go to a bank for them to take notice of us with around $500,000, depending on the bank. Andrew will tell us about other banks that go $1 million, and some in the States even $3 million. So through Andrew's network and with our growing community, there are people that could easily put this together. So you're right, we need somebody that we could rely on to say, okay, this deal is going to go down, we can raise enough money. So Andrew, through his network, we could probably create a product every 4 to 6 weeks, can you believe it? Now, what's great is with the digital age, we're able then to show this product to other people. And just with the ISIN number on the product, we can get people on board. Sorry, I mustn't use financial terms. So it's a reference number to get into the product. So much like a medical building where you need a certain deposit and you can fill up with as many people as you like so that the deal can go live, we also get an allocation. So the bank says, yes, we'll do this product. We'll happily take on board $2 million. Once that's full, it's full, that product closes, or the product goes live at a specific date. So much like you taking ownership of the medical building, there'll be a defined date, and there'll also be a defined ceiling of how many people, how much money can come into the deal, and the product goes live.
I think this is, something I really want to emphasize, and Gabby, I'd love you to jump in here as well, is that because we are helping our clients invest alongside the whale, we often, Chad and Andrew will be communicating with you and the rest of the team, and they'll be like, right, we've got a great thing and it's coming on Friday and it's launching on Monday, and it's wow, and people are like, and it's like, let's have a webinar and how are we going to explain the product? And even today we were going to launch the previous product, but it's already sold out. Like it's gone, including the, we got an allocation, and that, as you said, Chad, already went within 24 hours. And people are irritated. I want to be clear, they are irritated. They're like, well, hang on, I want to participate. So I think one of the things, Gabby, that you are and the team are recommending people is that each structured note might be slightly different. Each one will be with different partners, etc. But the overall essence of what Andrew and Chad are trying to create with their partners is the same thing, which is predictable income. And Gabby, what I'd like to know from you is, what should investors do? They've missed this one. They like what Chad and Andrew are saying. What should they do? Do they wait and sit on their hands for the next deal, or what do they do?
No, absolutely, Scott. And I think this speaks poignantly also to the turnaround time for creating notes as well. But I would encourage investors, if you know that you want to take advantage of a structured note, you want that predictable income, to fund your wallet now and to have that money in your wallet so that when we do launch our next note, it's very easy for you to deploy that money directly into the note itself. You don't have to worry about sending your funds into your wallet, and money movement can take time. Is it going to land in time for you to take advantage of the current note? It may, but it also may not. As we saw with our most recent note, we raised and hit our capital raise target in less than 24 hours. And so for all of the investors that knew that the note was coming but did not fund their wallets in time, unfortunately they missed out. And some of them I see on this call now, and I know that you're sitting with some money in your wallet. I would encourage you to keep that money there. We are always engaged with Chad and Andrew on a weekly, sometimes more than once a week basis, engaging with them and talking about when is this new note coming, to try and get that available to our community and communicate it as soon as we know that it's coming. Make it accessible to you as soon as we can so that you can take advantage of it, because it does move quickly. So that is my advice, is to fund your wallet, as if you know that this is something that you want to take advantage of. We aim to have at least 2 structured note products on our marketplace every quarter, but hope to increase that. And I actually would love Andrew and Chad to speak a little bit too about the market and how that also dictates how often we might see notes come through to our community.
Cool.
Yeah, maybe I can jump in there, Gabby. Absolutely right. I mean, this last product was it was on the back of a similar product we launched, the first one we did with Wealth Migrate. And that was, I think that was the first toe in the water. It's this whole rotation to value. So with the tailwind of tech last year, how tech was such the darling of the markets, we're seeing a sort of rotation into those bridesmaid kind of sectors that didn't really participate in the growth recovery last year, and that's obviously going to be a big flavor this year. So one of the really important parties, and we have to mention them, is obviously the bank, the investment bank, and it depends on their appetite for this, because this is a product that they contractually underwrite off their balance sheet. So you need to understand it goes through a raft of different committees, whether it be credit, risk, compliance, investment, for various sign-offs, because this is the banks underwriting it against their own money, against their balance sheet. So there needs to be appetite. And we thought we were, I wouldn't say we thought we were clever, but we thought we were very great. We were very grateful to get, in this last issue, we had $10 million and 10 million pounds that they underwrote. It is a global product. It's coming in from all 4 points of the compass in terms of the subscription amounts. And, certainly I know we had this great idea that we were going to launch this I think tomorrow or yesterday in advance of Freedom Day. Some great ideas and really clever marketing by Scott as usual. And there were some really big subscriptions coming in from the Far East and from the UK and other places. So unfortunately, it really prescribed far faster than I thought. And we were having pretty much a dialogue with the structures in the UK all the way through last week. It was a three-way conversation between Lyndon, Gabby, myself, Scott, and the structures in the bank to try and hold off and to try and create as much as possible. But I think these are lessons that perhaps we're learning. As Chad mentioned, this is not an open-ended product. So by that, what I mean is it doesn't have a finite, you can just keep, like a unit trust or a mutual fund that you can just add to it or subscribe to it when you feel the timing is right. This is an open and close. And as Chad mentioned, just to reiterate, it's either by time, there's a specific date that it will close, or if we run out of inventory, like what we did. This particular product was only supposed to close for subscription on the 6th of May. So it just lends credibility to the fact that this was a very, very powerful underwritten investment story in terms of what it's going to be giving. So, 16% contractually underwritten by probably the 15th largest investment bank in the world was something that it just gained a lot of attention. So we have to be governed by the appetite of the banks. Also, what's happening in the markets in terms of the world. I'm very confident that during the course of 2021, we're going to be coming out with a much more even playing field than it was last year. This time last year, the banks weren't even pricing anything because of what was happening and what had happened towards the end of March. Nobody was sure if the market was going to recover properly, the world was going to recover, we were all going to explode, implode, die of this disease. And the banks rightly didn't price for us because they had to look after their shareholders, their customers, their staff, their balance sheet, and it was right. So we only saw appetite coming back around about second half of the year. This year, I think it's a different ball game. There's lots of green shoots all over the place. We're seeing a much more robust and a much wider recovery. Sure, we've got spikes in various countries, so it's not going to go away overnight, but the opportunity to structure great products and really, really great payoffs that you're not going to see in the retail space. They are absolutely at our fingertips. We're just looking, and over the weekend, I've been working on the next ideas because this one is closed. So it's pointless sitting around. There's lots of opportunity. Let's start working on the next one. And, to look at the digital space and the opportunities that are out there, enormous, exciting opportunities for 2021. And we're going to be putting them into great products, getting underwritten by great banks with great payoffs and, coming to you at Wealth Migrate. How's that for a punt?
Before we move on, because I see Mark and others are actually asking about it, and I actually want to go online and do it live because people can participate. Chad, I want to ask one last question around this. And you and I have learned this lesson with medical buildings over the last 10 years and other asset classes, is that I think people often get fixated on should I invest in this structured note or that structured note? And, maybe I'll wait for a better structured note, or whatever. And what I'm hearing coming from Andrew is that they're coming out fairly regularly, let's say every 4 to 6 weeks. What's your kind of take on now the fact that I, because of the democratization, can put in, I don't have to put the whole farmhouse into one deal. I can actually put in a smaller amount per deal. What's your take on diversification across even structured notes?
So the beauty of structured notes now, I get the opportunity to diversify across different banks. So we'll have different issuing banks at different stages. We would have differing underlying assets from time to time. And I have the ability also then to start to stagger my predictable income. So my mother-in-law, for example, last year went into all 8 notes. She's now receiving coupons that are almost like every month, thereabouts, depending on the timing. And we would get a nice spread. So I could almost create a portfolio of structured notes, as we have with medical buildings. It's great to do a bit in each. And I would look for whatever's coming out in the next 4 to 6 weeks. If the product speaks to you, if the timing speaks to you, go for it. There will be others. And yeah, it's probably a good idea to pace yourself into different notes, as you're ready. See what it does, that it does everything that it's supposed to do, that you're comfortable, and then you can go again. So what's really cool is with those quarterly coupons that come back in and payments that come back in to your platform.
Money in your bank account.
There you go. What's so cool now is I could take that and perhaps rebalance my portfolio, save up for something. Gives me so many options, and if it's this steady flow, it's really cool. So yeah, a bit into each is a great idea. Certainly, what I would do.
And again, just to remind you, on the 5th of May, Chad and I are going to go more into some of the science behind how you can actually do that in terms of building up the passive income. What I wanted to do now, and if people have questions, I welcome those questions. I wanted to just actually share with you very quickly. This is something that we all follow, a guy called Roger Hamilton, and he's talking. This lady Kathy Wood is really go and check her out. She's an amazing lady, and she comes from a company called ARK Invest. And I think really what's changing around the world now is people actually understanding that you and I actually coming together, the collaborative power investing, we actually now can invest like the institutions. And I really wanted to kind of talk to Freedom Day because, Nelson Mandela said that money won't create success, the freedom to make it will. And what I've learned is that if Chad came to me and said, look, I need to invest $100,000 with him in a structured note, and I've never heard of a structured note, I'll be like, I want to go and spend the next 2 or 3 years trying to understand how this works and, what is it and what's the risk and whatever. But if I can invest a couple of $1,000 or even $100, I can start to learn about this investment asset class and I can start to see the returns. So, if I invest $100 and I'm getting 16% a year, which is 4% a quarter, I'm only getting $4 a quarter. Okay, and I'm not going to retire on $4 a quarter. But I tell you what, your mindset starts to shift when you realize that your Starbucks coffee is coming for free. And then you start to think, well, if I do that with $100, why don't I do it with $1,000? And then eventually you get back to your $100,000, which is where the passive income comes in. So, our philosophy is that there's 6 things that people need. They need the belief. So the purpose of tonight is actually just sharing with you the belief. Because if you don't believe that you can get this freedom, then you never will, full stop. And that's why Chad and Andrew very kindly shared tonight. The second thing is the knowledge. Some of you have heard about the structured notes before, some of you haven't. But tonight you've been shared another one. But the most important thing is access and investment, because I fundamentally believe that there's not a single person on this webinar or recording that ever learned to walk by reading a book or by attending a webinar. Each and every one of you eventually stood up, fell down, stood up, fell down, and probably many of you had a parent, which you could consider who's a coach, would be someone like Andrew or Chad that actually help you walk, because you learn to walk a lot quicker. And then you need a system to be able to manage it all in one place, the technology, you need the support and the accountability, and ultimately that's going to get you the results, the wealth, and the freedom. It's a journey. And like I said to you, we're going to be talking about this more on the 5th of May. However, what I wanted to share with you just very quickly is that my understanding, and Gabby, I don't know if there's still space available, but my understanding was that we literally opened up this structured note tonight for people to be able to participate. And we opened it up at 5 o'clock, so it's already kind of 45 minutes in. And I'm not sure whether there's still availability, but what I wanted to do was just go in and show people how easy this was. So you're on the platform, you can go in, you can invest in real estate deals. At the moment, we've got a deal in Portugal with a guy called John Raby, but tonight's not about that. So now we go to alternative investments, and you can basically see that the BBA deal is here. Now, the purpose for tonight was not to talk about this particular deal, because Chad and Andrew and Gabby have actually done a webinar all about this particular deal. So tonight was the overall of structured notes and how you can invest in these on an ongoing basis. But let's say I go in and let's say I'm interested in this and I want to go look through it. I can see here, and I just want to go through quickly, and I don't know if I've got enough money in my personal wallet. Let's see quickly. Yes, I do. Fantastic. I'm going to go in and I can look, I can see what the minimum investment is. I can see when it's listing. I can see the returns. I can see the cash on cash returns. I can see who the listers are. I can see the investment category. I can go read all about it. I'm not, you can see the documentation. You can read about the risks. You can see the milestone. You can even go in and do your project calculator and see what the returns are and everything else, what it's going to mean to you, when you're going to get paid, everything. So I'd like to think that
while you're there, Scott, if you can go back up to the projected returns calculator, because something that I think is important for our community to understand as well is for structured notes, we've actually reduced the investor fee, the upfront investor fee for the structured note product specifically for our investors. So you can see here that it is a 0.5% initiation fee for any structured note that has an auto call after, I believe it's 12 months. And it'll be a 1% initiation fee for any auto call after 12 months, 0.5 if it's auto call after 6 months. So you can also take advantage of this opportunity too, with a reduced upfront investor fee on our structured note specifically. And just so that everyone is aware, the note is open to invest. We have a very, very, very small, very small bit left here in the extra tranche that Chad and Andrew were able to eke out for us. So we wanted to make this opportunity for those who are interested to invest for as little as $97 to be able to start seeing this and take advantage of these smaller returns at that rate. So if you are interested and you have the money in your wallet currently, you can take advantage of this, but recognize that this note has gone fast and it is a very small bit left. So if you do IOI or submit your intention to invest tonight, there may be a chance that you may miss out, and we'll inform you of that tomorrow, but so that you're aware.
And I think the important part is that everyone who's online can actually see that you can go in, you can calculate, if I invest $1,000, what does it mean to me over the 4 years? You can go read about the bank, you can read about who Cashbox and IDAD are. So everything's here. You can go download all the documents. But let's assume that I like what I've heard from Chad and Andrew and I want to participate. I literally go to the invest. You can see that I've funded my wallet, so I've taken Gabby's advice. I did actually send money from my English account last week because I was worried that this was going to go quickly. Let's just say that I want to, I'm going to do $100 because I actually want to show people that you can do it from $100 basically. Okay. So, and it's actually even less if you want to, you can make it 97, but I just like 100 personally. So you can see now that I go continue. I obviously read all the documentation and I literally can go through it. I can download the subscription agreements and go through it. I then have to just show where my source of wealth is. So for me, I'm putting in $100 and please provide more detail of where the funds were derived from. So it's a bonus. And which geographical sphere, I'm just going to say South Africa. Okay, I declare that it's the right information and source of the funds, and I go continue. And it goes confirm your investment, and I go make the investment. And believe it or not, what you've just witnessed in less than a minute was me investing in a structured note. Now, just while I go here, and if I go
that
browse,
is phenomenal.
Yeah, And I think Chad, it's interesting because between you and Andrew, how long did it take you, Chad, to do your first structured note when you did it with Andrew?
Yeah, I'm very lucky. Andrew didn't tell me how hard he worked in the background. But Scott, I'll tell you what, this is just so convenient. I mean, I look at us trying to invest in properties. Beforehand, it was a flight, it was understanding, it was bank accounts. It was so complex. Yeah, well done, guys. This is amazing.
Yeah, Scott, if I can just chip in there, I mean, often, and I think this is as we've taken the baby steps with yourselves and learning some lessons, once you, as Gabby said, once you've got your wallet funded, once you've done your onboarding and you've got your cash across, you can pounce on these things very quickly. I mean, that's stunning to see click of a button and you're invested into a world-class product that otherwise would take a hang of a process in terms of dealing with platform providers, due diligence, subscription amounts, talking to your bank at the same time. It's an all-in-one press and play. Fantastic. Well done.
And I think what's also important, just to show people, is that I've got different structures here. So I chose to do that in my own name, but I could do it in my company structure. The only reason these are in red is that they're American companies at the moment, and American companies are blocked from a compliance perspective, or Americans full stop. But I can go so just like internet banking, I can go and choose my structure. I can even choose my currency. I can go and say, well, do I want to see what it is in ZAR or UK dollars or pounds or whatever? So you can go and see a wallet balance, and then obviously you can manage all your investments all in one place. So it makes your life a hell of a lot easier because, again, coming back to Chad's point, I intend to invest in every structured note going forward. And what I don't want to be doing is trying to get hold of people and, how much return did I get, and whether I invested $100 or $10,000, I can't remember, but I can now manage everything all in one place, which is incredibly powerful. And then what's nice is it all goes back in my same digital wallet, which I'm in control of. It's my money. And then I can reinvest that in the next deal. And it can be another structured note. It can be a property deal. It can be in a different currency, different country, different partner. And that's really the part. So the last thing I wanted to say is that our vision and our dream is to put smart investing in every single person's pocket. And what we've shared with you today is three things, really. We've spoken a lot about freedom and what it means to come from a place of freedom. The second thing we've spoken about and we've shared with you is an asset class that ultimately wealthy people have been investing in for a long time. And again, up until 2 years ago, I didn't even know about that. And so, what Chad and Andrew have shared with you is a way that you, an understanding of why people invest in this from a predictable income part. And the third thing we've shared with you is the way to actually access it now yourself. And I believe that, one of our dreams to put smart investing in everyone's pocket is that you can now be empowered to do this yourself. Now, unfortunately, with that empowerment comes a responsibility, because you no longer have the excuse of, I was on a great webinar with Chad and Andrew, but I can't participate because I don't have $500,000, or I don't have $1 million, or I don't have $10 million. What you've just heard about tonight was a deal where to close the deal, you needed $10 million and 10 million pounds, and yet you could participate alongside it with $100. And I just think that is significant in terms of what's possible for investors. And, no longer can we blame our governments or our bosses or whoever, as to whether we've got financial freedom anymore, because we can really copy what other people are doing. And so, for me, in conclusion, and Gabby, let me know if there's any questions, but in conclusion, if people want to get started, go and use this link, which will take you straight to the structured note. Which will take you on the platform, or quite frankly, just go to wealthmigrate.com, log in, and it's under alternative investments. I showed you where it was. We split up property and alternative investments. I really want to invite everyone to start their journey to investing globally. I don't care where you live in the world, and ultimately to become a global citizen. And I love the whole concept of this freedom that we speak so highly of, and that's really what, for me, a global citizen is all about. And I just really want to acknowledge and thank both Andrew and Chad for making it available on the platform so that people can participate, because it's these type of vehicles which will allow people to get the freedom that they want in their life.
Scott, and hats off to you for getting the platform together, because otherwise it's not accessible. So 10 years of hard work, I see them.
Yeah, overnight success. But I think, and my final comment is that, you know, what I'm hearing and what I'm seeing from Chad and Andrew is that there's going to be regular notes coming up. So if you can't participate now and you're irritated because it's like, you know, why not today? Gabby has agreed that for Freedom Day, we're going to drop all the minimums on all the deals from now until next Wednesday, which is Wealthy Wednesday, the 5th of May. So, you know, you can still act tonight and kind of fund your wallet and get your KYC. You won't be able to get involved in this structured note. It's closed already, but there will be more coming. And so for me, just like I funded my wallet last week before this deal was even done, I did it because you never quite know when the next deal is coming. And I missed out on the last one, which I was irritated by. I've actually missed out on a few. So I'm excited to finally be a structured note investor. And I'm quite glad and quite chuffed that Chad and Andrew got to witness it themselves. This is my first structured note, by the way, for everyone out there. And it's not because I don't want to invest in structured notes. I've liked it since Andrew said, but I've always missed it because my wallet wasn't funded. So the proactivity has now worked for me as well, which I really appreciate. You know.
Cool.
Absolutely. Thank you so much. Yeah, no, thank you so much, Andrew, Chad, and Scott, for your time this evening. I know that this was such a massive value add for myself and I think for many members of our community. And as Scott mentioned, we have lowered the investment minimum for our deals currently on the marketplace. One of those deals is the Marvila Portugal deal that Scott mentioned. So you can begin investing offshore and building your wealth for as little as $97. Fund your wallet today, and we will get back to you very soon on the next structured note from Cashbox Global as well. But thank you so much, everyone, and have a phenomenal weekend. Evening, excuse me.
Very quickly, Heather's asking, do you fund BNP Paribas? And the point being is that there's a thing on the platform where you can just go fund your wallet, and it literally has all the details there. The most important thing to do is to copy your reference. I, as an example, have set it up from my bank, and I've literally set them up as a beneficiary. And when I've got money, I just move it across, and it literally just turns up like magic in my wallet. So it is hard, like anything. It's hard the first time. It's hard to get KYC the first time. It's hard to get your wallet set, you know, just get it going and pay your first money. But once you've done it once, the world's your oyster. Yeah.
Definitely. Thank you so much, gentlemen. And
Thank
to our
you.
community, thank you for joining us on this Freedom Day. Have a wonderful evening, everyone.
You too. Thanks, guys. All the best.